Hi there. Welcome to the final closing bell of 2023. And God, I'm glad this year is coming to an end. It's been a hellish year, I think, for everyone. And there are signs of life we've seen recently. But I think we still have to consider a few important things about what's going on in these interest rates as rates drop rapidly. What does it mean for us as far as is it time to get bullish on stocks because rates are falling, or are rates falling because growth is about to plummet? That is really the big question. I think I've really called it pretty well recently. This being the US 10-year bond yield chart, which we've followed quite closely. This is that big rise in yields we've seen over the past few years. And last month I said, watch out. This could be the starting gun for a rapid fall in yields. And that has been taking place, hasn't it? And I guess we're wondering, is that going to accelerate from here? It's been, really very sharp, fast move higher to 5%. And that is starting to have an effect, of course, on the economy. We know inflation coming off the boil quite rapidly in the US. So real rates in the US actually quite high and restrictive, and then they still are. So there has been a bit of news recently from a few companies getting a sense of things slowing down. And last night, I'm recording this on the Thursday, the 21st, US stocks tapped the all-time high and then got hammered with the S&P down 70 points. So it's all a bit overbought at the moment in stockland. So I think we just want to sort of have a look and a think about where things can go from here. So just looking at this 10-year bond yield, you can see that it really is starting to accelerate to the downside. As I've been saying, once we see a reversal, it can actually be quite rapid, the move. You can see here, we've got the monthly sell pivot coming in, and then all of a sudden, rates really dropped. And you can see here in these past cycles, monthly sell pivot, really quite sharp falls once things turn down. And usually it's because, they raise rates far enough that something breaks, and then they have to change course and go the other way. And in those instances, sometimes, growth is plummeting and something has broken, some company's gone under that's systemic, and all of a sudden the Fed is lowering rates rapidly, getting QE going again to stop everything imploding. We're not quite at that point yet, but we do have to consider those things when we look at how stocks are rallying at the moment and where they're at, and ask ourselves whether stocks have maybe got a bit ahead of themselves, getting so juiced up on the fact that rates seem to be topping out at the moment. So let's just have a quick look at the S&P. So this is the S&P 500, and obviously the whole rally from 2009. Lovely, amazing, strong uptrend that we've been through. We've had a bad period over the last couple of years, but look at that. It's rallied all the way back and it's just retested the all-time high. So from my point of view, I can't be bearish right now because it is in long-term uptrend. Monthly buy pivot last month, and I said I switched off any sort of bearishness with that signal, and then it's blasted off. But just to play devil's advocate here, you should know about double tops. And from a technical point of view, when you look at this and it's just retested that all-time high, you do just have to be prepared that it could be a double top. And all of a sudden, it gets hammered. Way too early to say that's the case, but just got that in the back of my mind that it is a bit overbought here in the short term. And um, not so sure that growth is about to take off or that everything's going to be fine. So stocks may have just gotten a bit ahead of themselves right here. Uh, but you know, all it's going to take is continued rally and really breaking out, and you know, it's all new all-time highs and trending to the upside. So not going to take much to make it look really brilliant. But when you just look at last night's trading, you know, down 70 points, the selling pressure is around here. And just in the short term, it feels like this 2 month rally has basically met resistance at that all-time high. So it'll be interesting to see what happens over this next few weeks leading into the new year. So, you know, I think the no-brainer for me is that getting long the interest rate sensitive you know, sectors that are beaten up. I have been looking at a few REITs that provide some value. Also got long some bond exposure because I think that is the way to look at things because, you know, rates could fall and stocks could fall in a recession. And so you'd want to have that bond exposure at quite high rates as a good hedge so that your portfolio may sell off with the stocks, but you'll be making money on your bonds as rates fall. You get the capital appreciation as well, and you lock in some pretty good yields. So that's the way I've been looking at the market, is really from the point of view of getting the bond exposure and looking at those interest rate sensitive sectors. But stocks as a whole, I am just a little wary, despite the fact, you know, my chart is saying, look, you've got to be bullish for the moment and allow this to play out. And I bought 4 stocks just in December, 4 positions to capture what could be this trend, just allowing it to play out. But always a bit wary of double tops. You'll see back here, attempted rally, double top, and then a big sell-off. Even if you look back at the way it traded from 2000 to 2007, you'll see that it went to retest the old high and just tapped it as we did just the other night, retesting the all-time high, and then monthly sell pivot there the next month, and then off it went, and trend change and hammered into the crash. So, you know, these double tops technically can be the way that these long-term bull markets end. So that's just a little thing in the back of my mind, just wondering whether there's going to be some more selling pressure coming in after this 2 month, you know, very strong rally. But open to all outcomes, positioned long, and but gaining bond exposure and interest rate sensitive exposure more than just becoming gung-ho and massively bullish. Just wary of the possibility, if we do go into recession, stocks will come off, bonds will rally. And that has happened in past cycles. So you need to be aware of that. And just to finish up, just to review a few of the stocks I've been telling you about over recent months. You know, it's been a really tough year out there, hasn't it? I think for everyone. And I've been reticent to say too much, give away too many stocks in this closing bell. But hopefully, if you've been watching for a while, you'll remember that I had a chat about Spotify recently, around 150 bucks. I was saying that was looking interesting, and that's recently hit 200 bucks. So hopefully a few of you got onto that one. Long-term uptrend turning there, and I was showing you the initial wave higher that it had traded in from 2019 to 2020, going from $100 to nearly $400, and was just really looking at the buy zone of that area, but mainly thinking about the false break of the low. So that was a big clear out of positions, happened in sort of the end of last year, a big clear out below that low that was created in 2019. So I like to see that sort of a move, the false break, monthly buy pivot, and then starting to trend higher. And I gave you that one, and that one has gone pretty well. Also, you should remember I handed out MP1 to you guys, Megaport. I gave you that one when it was trading down at, I think, about $6.80. Again, that one was based on techniques of looking at major waves, looking at the buy zones of those waves, waiting for false breaks of major levels, monthly buy pivots. Gave you that, and look at the run it had, up to $12 in a straight line. Also, I gave you NXL, and that one I was chatting with you when the long-term trend was shifting, and it started to rally. That was down around $1. That I mentioned that to you, and that is now up at about $1.80. So just really pointing out that there is some good information that I'm giving you here. And if you're not a member of one of my trading services, I guess I'm asking, why not? You should get a chance to jump on. I think we've got a bit of a deal coming up at the end of the year. So I'm going to put it to you. Why not? Jump in. Join us for next year. We've gone through a tough year, and things should be settling down with rates falling. So it should be a bit of an exciting year next year, I reckon. That's enough. Big Merry Christmas to you. Please like my video on YouTube. I do love that. It helps me a lot. And I will chat with you in a few weeks after I've had a nice break. All right, cheers.